Hello and welcome to another update video about gold. What a frustrating market at the moment. It's just moving sideways. It's what I always say, you know. When we're dealing with corrections in the metals market, we have to be extremely patient. And anybody who gets frustrated or can't be patient, well, maybe it's not the right market for you, okay? They are extremely frustrating, these corrections, extremely frustrating. So you see that here, it already started this correction on the 1st of December. Yeah. So again, we've been caught in this 3-month correction now. It's just moving sideways in, however, what I still see as a bullish market. And we want to take a look at the options for this correction again. At the moment, I'm not covering gold too often. I mean, there isn't much to say really, but we should still do it every few days to see if anything changed. But the idea is still that we are here in an ending diagonal pattern in this wave 5, obviously. And this ending diagonal pattern is a 5-wave move in itself. And it started here in 2022, end of 2022. The subwaves just look 3-wave-like. So I've got an A, B, C structure in wave 1. Yep, that could be counted as a 5-wave move as well. But, you know, if we consider it in light of what happened here, it just makes sense to see this as a 3-wave move because it's possible. And this here could also, because this is not a 5-wave move. I mean, you need a lot of imagination to count that as 5 waves. It's just clearly 3. So I've got an A wave there. I consider the move down here as a B wave. It might be finished, might not be finished. I don't see it as finished yet. Without further evidence, I cannot confirm that a C wave rally to the upside in this wave 3 has started. We should explore what a target for a 3rd wave would be there. We can do that on the daily time frame. Let me go to the daily chart. Oops, or 2-day, doesn't matter. The way to do this is we take the length of the wave 1. We go to the low of the wave 2, which was the October 23 low. And I would like to see it get to the 1.236 extension. I mean, that would be good, you know, minimum 2,488. It will depend to a degree on the subwave, so it depends also on where the B wave, for example, bottoms. And if we have that low in place, we can define some further targets, specify them a little bit better. Now let's take a look at the microstructure. As mentioned in previous videos, I see this rally here as an A wave, which topped in December. The current decline, or let's say rather consolidation, because we're consolidating, just sort of dancing on that 38.2 Fibonacci level there at 2020. So it's probably still unfolding. I mean, there are 2 corrective structures that could really play out here that I see. It's either the blue count, which I think works out nicely. It's not perfect, but it still works out okay. In the blue count, we're dealing with this triangle pattern, which is an ABCDE structure. So B waves, for example, can unfold as triangles. And in this scenario, we completed wave A. We completed wave B, here the top, end of December. We completed wave C, which was here the low in February, 14th of February. And we're now likely in wave D. And then we could get one more higher low in wave E. So as long as we're forming higher lows and lower highs, that triangle would be a valid assumption. And the B wave could form as triangle, and we could see a breakout to the upside. But for a complete triangle, I'd like to see one more low, but a higher low in what would be wave E. Let's go to the 1-hour chart. So yeah, you see that here. Let me take the support area out. We don't need that anymore. What I would like to do is, you know, can we specify maybe a target for the D wave? Best way to do this is to take the length of wave B. We compare that with the length of wave D. And we're usually looking at either the 38.2 extension or the 61.8. Okay, 61.8 is at 2064. So let's see if we get there. I mean, it's sort of just this area, you know. It's not that it has to get there, but we're basically, I think, close to some kind of a top there in this 3-wave move, which started on the 14th of February. And then we could see a higher low. If we see, however, a break above what would be labeled here as wave B high at 2098, then I have to assume the low is in. Okay, then I would have to assume the low is in, and I would track more direct upside. We would then need to look at the structure. In another scenario, we are obviously dealing here with a WXY structure, and the Y wave is unfolding as an ABC. So we have basically two patterns. They are both overall bullish, but in both the correction is still unfolding. How can we distinguish between them? Well, it's quite simple. The triangle pattern will be invalidated if we get a break below this C wave low. So a break below 1997 suggests the white count is unfolding, and then we might just make one more low, possibly targeting 1981 or 1943. As long as we're holding these levels and overall this yellow box, further upside is expected. The only question is how much of a pullback does the market offer? And it could be either blue or white. And I just told you which level needs to break to confirm basically the white count. So yeah, not much more to add. So hope you liked the update about gold. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter. And if you're interested in daily updates about the S&P 500 as well as regular stocks updates, check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.